Hello everyone. So now we are on to the lecture 6, question number 15 of internal reconstruction. Before we go through this lecture, just have a quick revision of all the entries we had done in alteration of share capital as well as reduction of share capital. Just have a quick revision on your side so that when we are doing the things, you are able to exactly follow the things. Okay. I'll read the question and we'll directly solve it. Now, it's not like amalgamation where you have to read the whole question first and then identify 2-3 things like we used to do in amalgamation. We used to read the whole question and first identify is it merger or purchase. Then we used to identify the method of purchase consideration and then the accounting method. In this chapter, no need to do that. Just read the balance sheet, read the final question, what is asked, make the formats, and then read the question and pass the journal entries as per the adjustments. Adjustment wise, pass the journal entries. So you don't have to read the entire question and waste your time in the exams and then resolve or rather solve the entire question. Okay, I'll read the balance sheet, final question, we'll pause the video, you'll make the formats and then we'll solve the questions while reading the question itself. Have a look at it. The limited, name of company is not given, had adverse trading for past few years resulting in accumulated losses and overvalued assets. Its balance sheet as on 31st March 2019 was as follows. Have a look at balance sheet. Equity and liabilities, shareholders funds, share capital, 30,000 equity shares of 10 each, 3 lakhs, and make this 25,000. Okay, instead of 20,000 make it 25,000. Make the correction. 25,000 8% preference shares of 10 each, 2,50,000, 3 lakhs plus 250, 5,50,000. Reserves and surplus, security premium 10,000, profit and loss account. Negative means it's a loss. In bracket means it's a loss of 2,18,000. Here also make the correction. Instead of 2,18,000 minus 218 plus 10, it should be minus 2,08,000. Okay, make it minus 2,08,000. Not 18,000, 8,000. Non-current liabilities, long-term borrowings, 12% debentures of 100 each, 1 lakh. Outstanding interest on debentures, 6,000, so 1 lakh 6,000. Current liabilities, trade payable creditors of 1 lakh 21,000, which are directly given in outer column also. And overdraft of 1 lakh 40,000, which is given in outer column also. Actually, total should be given in outer column. And you can cross-check. 5,50,000 minus 2,08,000 plus 1,06,000 plus 1,21,000 plus 1,40,000 does come to 7,09,000. Now assets are non-current assets, fixed assets in that tangible assets, freehold property 80,000, leasehold property 1,20,000, plant 1,60,000, 62,000, 80,000 plus 1,20,000 plus 1,62,000 is 3,69,000. Then intangible assets have goodwill of 45,000. Okay. Then non-current investments have 65,000. In current assets, inventories or stock in trade is 70,000 and trade receivables or debtors is 1,60,000. Here also you can cross verify. 3,69,000 plus 45,000 plus 65,000 plus 70,000 plus 1,60,000 does come to 7,09,000. Note preference dividend is in arrears for past 5 years. This is a contingent liability. Okay, whenever any footnote comes below the balance sheet, it is supposed to be a contingent liability. And at the end, what you are asked, read this main question. You are required to show the journal entries and balance sheet after the implementation of the scheme. After the implementation of scheme means the shareholders and quote, see this below the balance sheet. See this sentence, the shareholders and quote approved the following scheme of reconstruction. If you remember, I told you this in the last lecture, that reconstruction, how will you distinguish between internal and external? In external reconstruction, name of new company would be given. And in internal reconstruction, name of new company would not be given. Here simply given scheme of reconstruction, no new name is given, means it is internal reconstruction. Okay. So what you all will do is, I am not reading this 9 adjustments. We'll read the adjustments and directly solve it. Okay. So make the format, all of you. First make the format of journal entries. And because of this 9th adjustment, remaining balances utilized to pay back overdraft In addition to capital reduction account, we'll also make cash and bank account. So two ledger accounts you all will make. One is journal entries format. Okay, that would be approximately, you can make it for 2 pages. Journal entries format, I repeat, for 2 pages. Capital reduction account you can make around 1, 2, 3, 4, 5, 6, 7, 8, so around 10 to 12 lines. And cash and bank account also 10 to 12 lines. Make these 2 formats, then we start with the question. Pause the video and make these 3 formats. Journal entries, capital reduction account, and cash and bank account. I repeat, cash and bank account because of 9th adjustment, and in case if you have a question, just now I said to you that directly start solving. Then when you come to the 9th adjustment, at that time also you can make cash and bank account and do the posting from all the entries. So if you don't make it in the beginning, you can make it at the end also. But right now, we know it in advance, so we make it in the beginning. So make the formats, or if you pause the video and make the formats. Yes, all of you must have done with the formats. Let's start with the question. As I said, we'll read and solve it simultaneously. So look at the first adjustment. The paid up value of preference shares and equity shares was to be reduced by 25% and 75% respectively. Preference shares is to be reduced by 25% and equity shares is to be reduced by 75% respectively. So for preference shares and equity shares, both of them, you can see preference shares also face value is 10, equity shares also face value is 10. Means 10 into 25%, 2.5 rupees is what they are sacrificing, and 10 into 75%, 7.5 is what equity shareholders are sacrificing. This both will be transferred to capital reduction account. Okay, whatever amount they are sacrificing will be credited to capital reduction account. Now, important thing is the face value will remain unchanged. So we have discussed this earlier also, that if face value remains unchanged, then we don't have to debit old face value and credit new face value. Straight away, whatever amount they are sacrificing will be credited to capital reduction. That's why I told you before you start with the lecture, have a quick look at the summary what we have done earlier. So if you see in this summary, first point, if shareholders reduce capital without changing face value, then directly share capital account debit to capital reduction. Old face value is debited and new face value is credited when changing of face value is done. Here no change of face value is done, so straight away whatever amount they are sacrificing will be transferred to capital reduction. So I'll write down the first entry. First they are talking about preference shares, so we have 8% preference shares. So if you can see in the balance sheet, 8% preference shares and 25,000 preference shares are there. So 8% preference share capital account debit. Okay, 8% preference share capital account debit. Now 2.5 is what preference shareholders are sacrificing, and 25,000 preference shareholders or preference shares are there. So 25,000 into rupees 2.5, what they are sacrificing is 62,500. Then equity share capital account debit. Now, what equity shareholders are sacrificing is 7.5 rupees. And you all can see in the balance sheet there are 30,000 equity shares. Okay, 25,000 preference shares, but 30,000 equity shares. And 7.5 is what they are sacrificing. So 30,000 into rupees 7.5. That is 2,25,000 what equity shareholders are sacrificing to capital reduction account. To capital reduction account with the total sacrifice of 2,87,500 being rupees 2.5 and rupees 7.5 per share sacrificed by preference and equity shareholders. Okay, preference and equity shareholders. Now posting for this, to capital reduction account. Okay, to capital reduction account means in capital reduction account on credit side, opposite both the accounts by 8% preference share capital account, $62,500, and by equity share capital account, $2,25,000. Okay, both the opposite accounts by 8% preference share capital account 62,500 by equity share capital account 2,25,000. I hope everyone is clear with this. I told you this in the last lecture also. What is the purpose of making capital reduction account? If any adjustment comes, like write off the goodwill, P&L account or any assets as far as possible, then we must know how much balance we have in capital reduction account. Secondly, if any surplus, this is the main reason. If any surplus remains at the end, then whatever amounts of surplus remains in capital reduction, we are supposed to transfer it to capital reserve. For that, this ledger account is required. So always in every question, whether asked or not in exams, capital reduction account is compulsory. You have to make it. Next. Now this adjustment is very important, and I have told you earlier also that for debentures and creditors, there can be no fixed entry. You have to understand the language of the question and pass the entry. The debenture holders took over the freehold property mortgaged in their favor. We secured the debentures by freehold property, so they took over that freehold property. Now this property realized 1,10,000. The balance amount after adjusting principal and interest was handed over to the company. Means you all can see here, debentures are 1 lakh, interest is 6,000. What they realized is 1,10,000. So after adjusting 1 lakh and then 6,000, 1,06,000, what is the balance amount that they would have handed over back to the company? 1,10,000 minus their dues are 1,06,000. So what is the balance amount they would have handed over back to the company? 4,000 rupees. This is what they have handed over back to the company. I hope you all are clear with this. Okay. Now there are so many entries to be passed through this. If you go for single entries. Okay. So first I'll explain the actual concept. Then I'll give you a shortcut method of directly passing the entry for such complicated adjustments. Okay. First understand the actual concept. First of all, property realized 1,10,000. Property is, you all can see here, 80,000. Freehold property is worth 80,000, which has realized 1,10,000. So we can first of all say that freehold property, there is an increase of 30,000 which we transfer to capital reduction account. Okay, that is our profit. Freehold property is of 80,000, which is now realizing 1,10,000. So 30,000 of freehold properties profit, increase in value, appreciation, will be credited to capital reduction. Now this property, debenture holders took over freehold property mortgaged in their favor. Means we have given this property of 1,10,000 to debenture holders. So first debentures will close and transfer to debenture holders account. Debentures are 1 lakh. Outstanding interest is 6,000. So debentures account debit. You don't have to write this, okay? Just understand the concept. I'm going to give you shortcut, easier method of doing this. So don't write it. Debentures account debit 1 lakh. Outstanding interest account debit 6,000. To debenture holders account, 1,10,000 is what we have to pay. Okay. I repeat, debentures account you reverse and debit. It's a credit balance. To close it, we reverse and debit with 1 lakh. Outstanding interest is a credit balance. To close it, we reverse and debit it with 6,000. An amount is payable to debenture holders. Credit the payables to debenture holders 1,10,000. Sorry, 1,04,000. Not 1,10,000, 1,04,000. Now, we gave this property of 1,10,000 to debenture holders. Okay, as it is given, the debenture holders took over freehold property mortgaged in their favor, and the property realized 1,10,000. So, debenture holders are the receiver. Debit the receiver. Debenture holders account debit 1,10,000. We are giving them property of 1,10,000. Freehold property goes out. Credit what goes out? To freehold property 1,10,000. Okay, this entry we will pass for giving them the freehold property. And then the balance amount after adjusting principal interest was handed over to the company. That is 4,000 rupees. Debenture holders pay us 4,000 back because their dues were 1,06,000. Sorry, not 1,04,000, 1,06,000, and we are giving them property of 1,10,000. So they give us back 4,000. So cash comes in, debit what comes in, cash and bank account debit 4,000. And debenture holders are the giver, credit the giver to debenture holders account 4,000. This is the actual concept. Means 1, 2, 3, 4. How many entries you are supposed to pass? 4 entries you are supposed to pass. I'll explain them one more time, be attentive. Very first, the property has realized 1,10,000 and the property is of 80,000 in the book. So there is increase of 30,000 which we credit to capital reduction. So freehold property account debit 30,000 to capital reduction account 30,000. Secondly, whatever amount is payable to debentures, we transfer it to debenture holders account. So debentures account we debit with 1 lakh. Outstanding interest account we debit with 60,000. They are both credit balance. We debit them and close them. An amount is payable to debenture holders. Credit the payable to debenture holders account 1,06,000. Now, what we are giving to debenture holders is this property of 1,10,000. So debenture holders are the receiver. Debit the receiver. Debenture holders account debit 1,10,000. Freehold property goes out. Credit what goes out to freehold property 1,10,000. Now against 1,10,000, they adjust their principal and interest of 1,06,000. This 1 lakh plus 6,000, and balance amount 4,000 they hand it over back to the company. So cash comes in, debit what comes in, cash and bank account debit 4,000. Debenture holders are the giver, credit the giver to debenture holders account 4,000. 4 entries are there. Now shortcut. Understand this shortcut properly. Instead of these 4 entries, we'll be passing only one combined entry. And henceforth in the further questions, I'll not be explaining you these 4 entries in detail. This is the first question, so I've explained you. We'll be directly doing that shortcut and passing a combined entry. Now what is a shortcut? Okay, what is a shortcut? I'll make you write that as a note also in the summary. The shortcut is, in such questions, you close debentures account, you close interest account, you close freehold property account. I repeat, you close debentures account, outstanding interest means all the liabilities account, and freehold property account which we are given to them. Just close them at the book values. I repeat, just close them at the book values. Okay? And in addition to that, whatever is the profit or benefit, like against 80,000, 1,10,000, 30,000, that you credit to capital reduction account, and 4,000 what the company is receiving you debit to cash and bank account. I repeat it one more time, listen carefully, and if any confusion, pause, rewind and listen to that once again. First, you close debentures account, outstanding interest account, freehold property account. Then, whatever is the profit you credit to capital reduction account, and whatever amount the company has received you debit to cash and bank account. Again, this is no fixed rule. This all will change from question to question. But closing of accounts and capital reduction account will remain same. Cash depends whether they are receiving more amount and hand it over to the company or not. So what we shall do is understand this. Debentures have credit balance. To close it, we will reverse and debit. Then I repeat, debentures have credit balance. To close it, we will reverse and debit. So 12% debentures you all can see in the balance sheet. 12% debentures account debit with 1 lakh. Okay, 12% debentures account debit with 1 lakh. Then outstanding interest is a credit balance of 6,000. To close that, again we will reverse and debit it. So outstanding interest account debit with 6,000. First we record all the debit accounts. Freehold property we have to credit because it's a debit balance, so to close it we have to reverse and credit. Capital reduction we have to credit. So credit accounts will record afterwards. First we'll record debit accounts. Now they handed over 4,000 back to the company. So cash comes in debit what comes in cash and bank account debit with 4,000. Outstanding interest was 6,000, not 4,000. And cash comes in debit what comes in cash and bank account debit 4,000. Okay, so first we record all the debit accounts. Now freehold property reverse and credit, it's a debit balance. So to freehold property account, to close it, we reverse and credit to freehold property. And as I told you, debentures, outstanding interest and freehold property, all the values will close from the balance sheet. That is 80,000. You to close it means you to close it at the book values. Then only they get actually closed. So to freehold property account with book value 80,000 and 30,000 of profit we credit to capital reduction account. 30,000 of profit we credit to capital reduction account. So this single entry will serve the purpose. It becomes so simple against these 4 complicated entries. And in these 4 entries, if you combine them, then see that freehold property you credit with 1 lakh 10, debit with 30,000. So net credit is how much? 80,000. Capital reduction credit with 30,000. Debentures account debit 1 lakh, outstanding interest 6,000. Now debenture holders you credit with 1 lakh 6,000, debit with 1 lakh 10,000. So net debit is 4,000. In fact, this debit also gets closed with 4,000. So what is a combined entry? Debentures account debit 1 lakh, outstanding interest account debit 6,000, cash and bank account debit 4,000, to freehold property account 80,000, to capital reduction account 30,000. That is what we have passed over here. Whatever is the combined entry of these 4, we have directly passed it over here. And what is the shortcut of directly passing that combined entry? Close debentures account, close outstanding interest account, so you reverse and debit them. Close freehold property account, so you reverse and credit that. And whatever amount company is receiving from debenture holders, cash comes in debit, what comes in cash account debit. And whatever is the profit that you credit to capital reduction account. So directly you all can pass a combined entry. You can write this as a note in the summary where we have written so that you understand the concept actual. As I said, if you remember, I have told you here, in this third entry I have told you if debentures or creditors reduce their capital, debentures creditors to capital reduction is just a concept. Actual entry will differ from question to question. So here you can write down as a note in the same third entry that close debentures, outstanding interest and asset. Freehold property is in this question, it can be any other asset, other questions. So close debentures, outstanding interest and asset account. Debentures and outstanding interest have credit balance, so you debit them to close it. Asset is a debit balance, so you credit them to close it. Okay. Further, cash received will be debited by the rule. Debit what comes in, cash comes in, and profit will be credited to capital reduction account. Okay, profit will be credited to capital reduction account. There is a shortcut in this question at least of doing it, and majority questions it will follow. However, we will see the language in the other questions how to do the same. But this is a note, main note, this part will remain same. Closing of debentures, outstanding interest, asset account, capital reduction will remain same. Cash and bank will differ. Whether they are receiving more amount, less amount, we have to pay them, they pay us. But this debentures point, okay, this debentures, outstanding interest, freehold property asset, and capital reduction part will almost remain same in every question. So I hope everyone is clear with this. Okay, if any confusion, you can rewind the video and listen to that once again, but this is a very important entry. Narration will keep it short and simple, being freehold property given to debenture holders. Being freehold property given to debenture holders. Now posting. To capital reduction account 30,000. So in capital reduction we'll write 30,000. Now which opposite account will we record? Outstanding interest, debentures or cash and bank account? Which account? Think about it. None of these three. This is a combined entry. Posting is always done from single entry. So we would write on the credit side by freehold property. Tell me one thing. This capital reduction 30,000 is of what? Against 80,000 of freehold property, it is sold for 1,10,000. That profit of 30,000 we are talking about. So that 30,000 is the profit of freehold property. So to capital reduction means in capital reduction you'll write on credit side. But what is the reason for this 30,000 of capital reduction? By freehold property account. Okay, don't write that debentures or outstanding interest or cash in bank. The reason for this 30,000 of increase in capital reduction is freehold property. So by freehold property account 30,000. I hope everyone is clear with this portion. You know the best advantage of video lectures, wherever you are confused, you can pause, rewind and listen to that again so that that concept becomes clear. Now let's proceed with the third adjustment. The investments are sold for rupees 80,000. Okay, cash and bank account will make at the end only. We made the format, but we'll do it at the end to find out what amount we have to pay back to the bank overdraft. Okay, that we'll do at the end. As such, I told you, if you don't make cash and bank account in the beginning, you don't have an idea. Then when you come to that adjustment, you can make it and do the posting and find it out. So we'll do the posting in cash and bank at the end. But capital reduction account you make in every question, so you can do the posting simultaneously. Now investments are sold for 80,000 and investments are, you can see a non-current investment 65,000. So 15,000 of profit will be credited to capital reduction account. 15,000 of profit will be credited to capital reduction account. Now investments are sold for 80,000. Cash comes in. Debit what comes in. So cash and bank account debit 80,000. Investments goes out. Credit what goes out to investments account. Now investments of 65,000 go out and profit of 15,000 will be credited to capital reduction account. Okay, credit all incomes and gains. 15,000 is the profit. Credit all incomes and gains to capital reduction account 15,000. Being investments sold. Being investments sold. Now again, to capital reduction means capital reduction on credit side, but don't write by cash and bank account. What is the reason for this 15,000 of profit by investments account? This is again a combined entry. So single entries would be cash and bank to investments 80,000, investments to capital reduction 15,000. So to capital reduction means you write by investments account from single entries. I repeat, two single entries would be cash and bank to investments 80,000 and then investments to capital reduction 15,000. Now investments to capital reduction 15,000. So capital reduction credit side opposite account by investments account 15,000. Now fourth entry, fourth adjustment. Obsolete stock 10,000. Obsolete means outdated. An irrecoverable debt worth rupees 11,000 means debtors. Irrecoverable debt means we have to close debtors. We have to write off debtors. Worth rupees 11,000 are to be written off along with goodwill and P&L account. So what all things we have to write off? For that the entries, now we are using capital reduction to write it off. So capital reduction account we will debit and all these assets, stock, debtors, goodwill and P&L account also it's a loss of 2,18,000. So that loss as a debit balance will close and credit that to write it off. So for utilizing the capital deduction, we have studied this entry earlier. Therefore, I told you have a quick revision of all the entries what we did earlier. You can see in the 7th entry, for writing of various assets and losses, capital deduction account is to be debited and all assets and accumulated loss P&L account is to be credited. So for this, the entry will be capital deduction account debit. For utilizing the capital deduction, we will reverse and debit it. Capital reduction account debit. 2. Stock account 10,000. Stock of 10,000 is to be written off. So to stock account 10,000. Then what else is to be written off? See that. Irrecoverable debt 11,000 means we discussed debtors. To debtors account 11,000. Then after debtors, okay, are to be written off along with goodwill and P&L account. Amount is not given, means entire goodwill of 45,000 and entire P&L account of 2,18,000 is to be written off. So to goodwill account 45,000. Okay, to goodwill account 45,000 and to profit and loss account 2,18,000. So what is the total amount? 10, 20, 60, 270, 278, 283, 2,84,000. All of you can do it in calculator. 2,84,000 is the total amount written. Being various assets written off. Now it's posting capital reduction account debit. So in capital reduction account, we'll write on debit side all the opposite accounts. To stock account 10,000. To debtors account 11,000. To goodwill account 45,000. And to profit and loss account 2,18,000. I hope everyone is clear with this. Okay. Capital reduction account debit. So in capital reduction account debit side, all the opposite account. To stock 10,000, to debtors 11,000, to goodwill 45,000, into profit and loss account 2,18,000. Now next, 5th adjustment. So 4 adjustments are done. There was a claim against the company not provided to the extent of 20,000, but this was settled for 8,500. Now 20,000 is of no relevance. Finally, it is settled for 8,500. Okay, and it was not provided. So first we'll make a provision for that. How will we make a provision for that? Capital reduction account debit to claim payable, and then for its payment, claim payable to cash and bank. All of you can see this in the summary. That's why I said to you, have a quick revision. So this 5th point, pay any contingent liability. Contingent liability means which is not appearing in the books. This is also contingent liability, we did not provide for it. So capital reduction to contingent liability. Here it is claim. So capital reduction to claim. First we'll provide the liability. First we'll create the liability. And then to pay it, contingent liability to bank. So claim account debit to bank account. Okay. What we can do is here we can combine this both, because 5th and 6th have similar entries. So we can combine it with preference dividend. Okay. The preference dividend for 2 years was to be paid in cash. The remaining amount to be cancelled. Now the remaining amount which is to be cancelled will have no entry. The remaining amount to be cancelled will have no entry. But 2 years amount which is to be paid in cash will have the entry. Okay, if you remember this also we have done in the summary, that if the preference dividend is sacrificed, so 3 years amount is sacrificed, for that there is no entry. and if any amount is paid, 2 years amount is paid, for that the entry would be capital reduction to preference dividend to bank. Now you all can see 5th and 6th, capital reduction to contingent liability, capital reduction to preference dividend is a similar entry. Contingent liability to bank, preference dividend to bank is a similar entry. So we can pass a combined entry for this adjustment 5 and 6. First, we'll make a provision, we'll create a liability of 8,500 for claim and 2 years preference dividend. Out of 5 years, 2 years preference dividend means this 2,50,000 into 8% into 2 years, 40,000 rupees. Cross check. 2,50,000 into 8%, 20,000 is yearly dividend into 2 years, 40,000. So first we'll create the liability, 8,500 of claim. For that, capital reduction account debit. Okay, capital reduction account debit to claim account. Claim payable is 8,500. 20,000 is of no relevance. We have settled for 8,500, so we have to create a liability of 8,500 to preference dividend account. Again, in preference dividend, whatever amount is paid is only to be recorded. Whatever is sacrificed, for that there is no entry. So 2,50,000 of preference share capital into 8% of dividend into 2 years. That comes to 40,000. So total liability we have to provide is 48,500 by utilizing capital reduction. Okay, you all can see here 2,50,000 of preference shares into 8% of preference dividend, and for 2 years, so into 2 years, being claim and preference dividend provided. Right now we have provided that. We have created the liability. So being claim and preference dividend provided. Now for its payment, 2.5 per share on revised equity and preference shares was made, and this was paid by all the shareholders. We have seen that they've sacrificed 2.5 and 7.5 rupees. From that, this 2.5 is called completely by the company, and from this 7.5 for both equity and preference we have called the money. Preference sacrifice 2.5, that money company calls again. Equity sacrifice 7.5, from that 2.5 company again calls from that. So these entries will be same as we studied in second year BCom. 2 entries will come. First we'll make the call money due, and then we'll pass the entry for receiving the call money. Here also we'll combine for equity and preference. So equity share call account debit, 2.5 is called from both equity and preference shareholders, and there are 30,000 equity shares. So 30,000 into 2.5, what is called from equity shareholders is 75,000. Preference share call account debit, now 25,000 preference shares are there. So 25,000 into 2.5, 62,500 is what we have called from them. Okay, you all can see here 25,000 preference shares are there. So 25,000 into 2.5, 62,500. To equity share capital account, you all must remember this entry we have studied in SY BCom. We have studied it earlier in 12th standard also. Share call account debit to share capital account when the call money becomes due. So equity share capital account 75,000. To preference share capital account 8%, right? Yeah, 8%. So 8% preference share capital account 62,500. Okay, for calling the money when the call money becomes due, share call account debit to share capital account. This is the first entry we would pass. Let us write a short and simple narration being call money due. That's it. Being call money due. And then it is given it is paid by all the shareholders, means there are no call scenarios. Okay, you all can see here it was given. This was paid by all the shareholders. There are no call scenarios. So if you all remember the entry for receiving the money, cash and bank account debit, rather bank account we used to debit always because we always receive it by bank transfers only. What is the total amount? 75 plus 62,500, 1,37,500. Okay. To equity share call account. To equity share call account. Okay, call account is what we have to reverse and credit to close it. 75,000. This will reverse and credit to close it. And same way to preference share call account. 62,500. Okay, so these entries we have studied in second year BCom, earlier in 12th standard also. When the call money is to be collected, share call account debit to share capital account and bank account debit to share call account, being call money received. Now no posting is to be done because neither in 7th entry nor in 8th entry capital reduction account is affected. You all can see that. No capital reduction account, so no posting is to be done. Now 8th entry, 8th adjustment. The authorized capital was suitably revised from rupees 6 lakhs existing. Okay, they did not mention it in the balance sheet only, but we have to write it in double underline. Existing was 6 lakhs and is revised to 10 lakhs. Means now in the new balance sheet, what we will write, the authorized capital is 10 lakh rupees, which was equally divided between equity and preference shares. Equally divided means out of 10 lakhs, 5 lakhs of equity and 5 lakhs of preference. But this will come in balance sheet. It has no relevance in journal entry. Okay, it has no relevance in journal entry. When we make the balance sheet, we'll write 5 lakhs of equity share capital, 5 lakhs of preference share capital, total 10 lakhs of authorized capital, only in balance sheet, no relevance in journal entry. And the last one, the remaining balance is utilized. Remaining balance means cash and bank balance is utilized to pay bank overdraft. For this, we have to make cash and bank account. There is a bank overdraft of 1,40,000. You all can see here. So depending on the cash balance with us, if we have less than 1,40,000, to that extent, whatever is the remaining balance, suppose we have 1,20,000, then 1,20,000 we will use to pay bank overdraft, 20,000 will still remain outstanding for future. And if we have by chance more than 1,40,000, then entire 1,40,000 we will pay off and remaining will still be with us in cash and bank balance form. For knowing this, it is necessary to make cash and bank accounts. So let us make cash and bank account to find out how much can we pay towards bank overdraft. First of all, what is the cash and bank balance already there in the balance sheet? In current assets, stock and trade is there, debtors are there. We don't have cash and bank. Okay, we don't have cash and bank, there is no bank balance. So directly from journal entries we'll do the posting. First entry has no cash and bank. Second entry has this. See here, cash and bank account. Debit with 4,000. So cash and bank account debit side will write 4,000. And what will you write on the debit side? This. We received that 4,000 from debenture holders account if you remember it. So to debenture holders account, 4,000. Okay. Single entries we have done earlier. From that we have to do always the posting. So cash and bank 4,000 debit side to debenture holders account. Then see the third entry again. We have cash and bank account debit with 80,000. So this also will write in cash and bank account debit side. 80,000 is received for investments. So to investments account 80,000. Okay, to investments account 80,000. Then after that, fourth entry has no cash and bank. Fifth entry has no cash and bank. Sixth entry has it. We have credited cash and bank with 48,500. So cash and bank credits at both the opposite accounts. By claim account 8,500, we have paid for claim 8,500. By preference dividend account 40,000, we have paid for preference dividend 40,000. Then after preference dividend, 7th entry we don't have cash in bank, 8th entry we have debited with 137,500. So cash and bank account debits at both the opposite accounts. To equity share call account, to equity share call account 75,000, to preference share call account 62,500. Okay, all the entries posting is done in cash and bank. So this is what I said to you. Even if you forget to make it in the beginning, that's okay. In the exams, you don't need to read the question in advance. At the end, whenever you come across such an adjustment, at that time you can make cash and bank. Now let us find out the balance. So first we'll do debit side total always. That should always be more. 80, 150, 210, 217, 221, 500. You all can do it in calculator. Okay, 80, 84, 159, 2,21,500. Now from 2,21,500, if you all subtract 48,500, then 2,21,500 minus 48,500. So you have more than 1,40,000. Okay, 221,500 minus 48,500 means if you subtract 50,000, 1,61,500, 71,500 plus 1,73,000. You have 1,73,000 with you. Whereas we are supposed to pay a bank overdraft of only 1,40,000. Okay, you all can see here 1,40,000. We have more balance. So entire bank overdraft of 1,40,000 we will pay by overdraft account 1,40,000. And then whatever amount remains by balance carried down, that will come in the balance sheet in cash and cash equivalents. 33,000 of balance will remain. As I said, 1,73,000 is there, and for 1,40,000 will pay for bank overdraft, so 33,000 will remain. Now, further the entry would be, we are paying 33,000 of bank overdraft. So overdraft account is the receiver, debit the receiver, overdraft account debit. Okay, bank is the receiver, debit the receiver, overdraft account debit 33,000, or you can say overdraft is a liability, credit balance to close it with reverse and debit. Cash goes out, credit what goes out, or bank is the giver, credit the giver to cash and bank account 33,000. This is for the payment of bank overdraft. Being 33,000, sorry, 1,40,000. 33,000 is the balance remaining. We have paid full 1,40,000. So overdraft account debit 1,40,000 to cash and bank account 1,40,000. Being overdraft paid. Total of journal as a formality is to be done. You always know that we have been doing it in past. Okay. So total of journal 287,500 plus 1,10,000, 387, 4,17,500 plus 84,97,500, 597, 697, 777, 781, 781, 781 plus 48, 781, 821, 829, 838 lakh 30, 878, 500, 878, 500 plus 978, 10 lakh 8, 15,000, 16,000, 10 lakh 16, 11, 16, 1153, 500, 12 lakh 93,500. Just cross verify. I have not done it with calculator. Maybe if you get a different amount, whatever it is fine. Okay, but this should be the total of journal. We have to do it. Now in capital reduction account, what we have to do? Okay, actually total of journal should not be done here. However, it's right only. In capital reduction account, if any surplus remains, then we are supposed to transfer it to capital reserve. So always first do the credit side total and find out if any surplus remains. 62,500 plus 2,25,000, 287,500, 3,70,500, 3,32,500. Now from 3,32,500 you subtract all the amounts of debit side. If zero amount remains, means it is a squared up account. If any amount remains, then to balance carry down. But you can see here 2 lakh, 210, 20, 60, 70, 310, 311, 16, 24, 32, 500. It gets tallied. It's squared up account. No balance remains in capital reduction. If at all any balance remains, what is the purpose of making capital reduction account? I told you. If any balance surplus remains, you would transfer that balancing figure to capital reserve account. And one more journal entry would come, capital reduction account debit to capital reserve account. But we don't have any such entry. Okay. Now, what is else asked in the question? Show the journal entries and balance sheet. These two ledger accounts we have made extra. Now, balance sheet, make the formats. Okay, pause the video and make the formats. You already know the balance sheet format of a joint stock company. So I'm putting it over here. You all make the format of balance sheet. And once you are done, then play the video. We'll make the notes to the format. So heading balance sheet as on 31/3/19 balance sheet, and you must mention the word of ... limited and reduced. Okay, these words should be mentioned and reduced as on 31/3/19. So make this balance sheet format. You all already know that. Otherwise, it's there on the screen. Pause the video and make the format, and then play the video. We'll make the notes and then do fill in the blanks in the balance sheet. So let's start with the notes. First note will be share capital. First authorized capital, all of you will give the heading. Okay, first note share capital. In that first heading, authorized capital. Now, as we have read in adjustment number 8, that authorized capital is 10 lakhs, which is equally divided between equity and preference, means 5 lakhs, 5 lakhs. And both the face values are 10 only, means 5 lakhs divided by 10. I repeat, both the face values are 10 only, means 5 lakhs divided by 10, 50,000 shares are there in equity as well as in preference. So we would mention that 50,000 equity shares of rupees 10 each, that is 5 lakhs. And 50,000 8% preference shares of rupees 10 each, that is also 5 lakhs. So total authorized capital is 10 lakhs as given in the question, equally divided between equity and preference, double underline. Authorized capital we always double underline, it is not to be included in the total. Now give the heading issued, subscribed and paid up capital. Now this is important, how to find issued, subscribed and paid up. Listen carefully. 30,000 equity shares are already there in the balance sheet of rupees 10. From that equity shares of 10 rupees, 7.5 they sacrificed, but without changing the face value, means from 10 they sacrificed 7.5 without changing the face value. So they became 2.5 paid up, face value same, they became 2.5 paid up, and company called 2.5. Here you can see in adjustment 7, company called 2.5 from them again. Again they paid 2.5 back to the company. So now they are 5 paid up. Now they are 5 paid up. I repeat, without changing the face value, so this complication little bit has arisen. From 10 rupees, they sacrificed 7.5 without changing the face value. So face value would remain 10, but 10 minus 7.5, they would become 2.5 paid up. And again, company has called 2.5 as first, or you can say final call, first call either, because still it's pending. So first call 2.5, again company is called from them. So 2.5 plus 2.5, now they become 5 paid up. In case of equity shares, they become 5 paid up. Face value remains unchanged as per the adjustment. And 30,000 were there in the balance sheet. So we'll write 30,000 equity shares of rupees 10 each. Face value remains same, but rupees 5 paid up. Amount would be 30,000 into 5, 1,50,000. I repeat it once again. You can directly write it in outer column. Okay, generally inner column for call scenarios. So you can directly write it in outer column. I repeat it once again. Listen carefully, or else of course you have the option of rewinding it again. 10 rupees was the face value of equity shares, from which they sacrificed 7.5. So 10 minus 7.5, they became 2.5 paid up. And as per 7 adjustment, again company called 2.5 rupees from them. So 2.5 plus 2.5, they became 5 paid up. So now we have 30,000 equity shares of rupees 10 each, but 5 paid up, 1,50,000. Same way if we do it for preference shares, then preference shares also had face value of 10 rupees. Okay, so if we do the same calculation for preference shares, 10 rupees was the face value, but they sacrificed 2.5. Okay, preference shareholders sacrificed 2.5, so they became 7.5 paid up. And company again called 2.5 from equity and preference both. So again company called 2.5 from them, means they become full 10 paid up. So preference shareholders have become fully paid up. I repeat, preference shareholders have become fully paid up. I repeat it again, from 10 rupees they sacrificed 2.5. So 10 minus 2.5, 7.5 paid up. And again company called 2.5 from them. So again 7.5 plus 2.5, 10 paid up. They became fully paid up. So here we'll write 25,000 preference shares were there in the balance sheet. We'll write 25,000 8% preference shares of rupees 10 each and fully paid up. Now they have become fully paid up. So 25,000 into 10, 2,50,000, and 1,50,000 plus 2,50,000, total 4 lakhs. Okay, total share capital that will come in the balance sheet is 4 lakhs. Now note to reserves and surplus. So what did we have in reserves and surplus earlier in the balance sheet? Security premium of 10,000. You can see in all the entries, none of the 8 entries security premium is affected, so it remains as it is. Okay, security premium remains as it is, that is 10,000. It is not affected in any of the journal entries. So security premium account 10,000 as it is. And there is no other account, because this P&L account loss was there 2,18,000, but that is written off. You all can see in entry number 4, this P&L account of 2,18,000 has been written off, so it will not come in the balance sheet now. And mostly one more thing would come, that is from the last entry, if any balance is transferred to capital reserve, we would write it in reserves and surplus. But here no amount in capital reduction is transferred to capital reserve, so no other amount will come in reserves and surplus. So total of reserves and surplus would be 10,000 itself. Okay. Then after that, shareholders, share funds, share capital, reserves and surplus, non-current liabilities, long-term debt we don't have. Why we don't have? We had long-term debt of debentures, but then that is settled. So now in the new balance sheet, no debentures liability will come. We have given them freehold property. Then after long-term debt, we never have these items generally. Other non-current liabilities and long-term provisions, straight away current liabilities. Short-term borrowings also we don't have, because we had bank overdraft in short-term borrowings, but that we have paid. Since bank overdraft is paid, there is no more short-term borrowing liability with us. After short-term borrowings, we have trade payables. That will come in the balance sheet. So directly note 3 will be of trade payables. Creditors. In none of the adjustment, creditors are affected. No settlement is done. No sacrifice is done by them. So creditors will appear as it is in the balance sheet, 1,21,000. Okay. Trade payables, creditors will come as it is in the balance sheet, 1,21,000. Then after trade payables, we don't have any short-term provisions and other current liabilities in the existing balance sheet itself. So directly assets side we have fixed assets and we have tangible fixed assets. Okay. So in assets we have fixed assets and tangible fixed assets. So note for fixed tangible assets or tangible fixed assets rather. What do we have in that in the balance sheet? Intangible fixed assets we have, and we have to write all, even if they are written off. As per the rule I made you write that for 5 years, we have to show the amount written off in case of fixed assets. The amount written off for various fixed assets are to be shown in the balance sheet for 5 years. So even if any amount is written off, we would show that. But here, freehold property 80,000 is given to debenture holders, so that will not come in the balance sheet. Directly leasehold property 1,27,000 as it is. It is not affected in any of the entries. So leasehold property 1,27,000 as it is. Then after leasehold property, okay, I repeat, this freehold property won't come because that we have given to debenture holders, so it is no more there with the company. So that won't come. Leasehold property 1,27,000 it is, and plant 1,62,000 as it is. Okay, plant also is not affected in any of the entries, nothing is written off. So plant 1,62,000 as it is. So 1,27,000 plus 1,62,000. Total fixed tangible assets would be 2,89,000. Okay, total tangible fixed assets would be 2,89,000. I repeat, 1,27,000 of leasehold property, 1,62,000 of plant. Freehold property is given to debenture holders. Then next item in the balance sheet is intangible assets. Okay, that is goodwill we have, but that we will show. Okay, that we will show, that is to be written off. So that we will show for 5 years, we will show for fixed assets. So even goodwill is a kind of fixed assets, we would show that. Goodwill will be shown in intangible fixed assets along with the written off amount. So goodwill is 45,000. Okay, as you can see in the balance sheet, goodwill is 45,000. For fixed assets, we will show the amount written off for 5 years. Goodwill is a fixed asset. So goodwill 45,000 minus, we will write this language, written off under the scheme of reconstruction, minus written off under the scheme of reconstruction, 45,000. So amount would become nil. Total would become nil. Means amount will not come in the balance sheet. We'll write it as nil. We'll write the note number also. But for fixed assets, it is compulsory for 5 years period to show the amount written off in the scheme of reconstruction. Not for current assets, only for fixed assets. Okay. Then after intangible fixed assets, we have non-current investments. That won't come because non-current investments were there of I think 65,000, but then they are sold for 80,000. Okay, non-current investments were there for 65, but we have sold them for 80,000 as per adjustment 3. So now they don't appear in the balance sheet, they are sold off. Now in current assets, we don't have, okay, this item of long-term loans and advances we don't have, other non-current assets we don't have, current investments we don't have, directly inventories. Inventories we have stock. Stock of 70,000 is there in the balance sheet, from which, from that stock of 70,000, we have written off the stock of what amount? 10,000. You all can see in entry number 4. So stock will appear as 60,000. Okay, here we don't have to show in compulsory for 5 years written off amount. So directly from 70,000, 10,000 is written off, means now the amount that will come in the balance sheet is 60,000. Total 60,000. Okay, I repeat, stock in the balance sheet is 70,000, from that 10,000 is written off, so 60,000. Then after that, trade receivables are 1,60,000, from which 11,000 is written off in 4th entry. Okay, trade receivables are 1,60,000, from which 11,000 is written off. So next note would be next note number 7, trade receivables, debtors from 1,60,000, 11,000 is written off. So 1,49,000 will come for trade receivables, and that itself will be the total. The next item in the balance sheet in the order is cash and cash equivalents For that we have made the ledger account. So what amount will come in cash and cash equivalent? 33,000. Otherwise, a lot of calculations would have been there. Debit amounts added, credit amounts subtracted, then we get the amount. But here directly from the ledger account of cash and bank we get 33,000 of cash and cash equivalents. And then after cash and cash equivalents, we don't have short-term loans and advances and other current assets. So these 8 notes will come. Let us put the amounts in the balance sheet for these 8 notes. Share capital from note number 1 is 4 lakhs. Reserves and surplus from note number 2 is 10,000. So 4 lakh 10,000. Long-term debt, non-current liability, long-term provisions we don't have. Short-term borrowings we don't have. Trade payables from note number 3, 1 lakh 21,000. Short-term provisions, other current liabilities we don't have. Total 1 lakh 21,000. 4 lakh 10 plus 1 lakh 21,000. 5 lakh 31,000 is the total of liabilities. Now asset side, fixed assets, tangible fixed assets as per note 4, 2 lakh 89,000. Intangible fixed assets as per note 5 is nil. And we don't have non-current investments, loans and advances, other non-current assets. So total 2 lakh 89,000. Current investments nil. Inventories as per note 6, 60,000. Trade receivables as per note 7, 1 lakh 49,000. And cash equivalents as per note 8, 33,000. And we don't have short-term loans and advances and other current assets. So 160, 2 lakh 39, 2 lakh 42,000. Okay, you all can do the totals in the balance sheet in the calculators. Now 289 plus 242, so 2, 4, 480, 520, 531. 5 lakh 31,000. All of you can see this. Yes, all of you can see this. 5 lakh 31,000. The balance sheet gets carried. Okay, so this is how you solve the questions, and hopefully in exams, maybe they don't ask you balance sheet, only journal entries and capital deduction account. It depends. But the things are comfortable. This is the last question done in college in past years. Only 2 questions have been done. Remaining all is we have to do the practice from university paper sets, but we'll be doing it because I understand 2 questions are not just sufficient to understand this concept of long questions. So university paper set questions also I'll be doing in video lectures plus in live lectures, live sessions also. So do attend my live sessions also, because whichever questions I take up in live session I won't be doing in video lectures. So with the help of video lectures plus live sessions, we will finish all the university paper sets practice also. Okay, that will be all for today. Bye everyone. Take care. See you in the next lecture.